Okay, welcome. So this is EXEL. That's its ticker symbol, EXEL. Its name is exelixis Inc. It's a biotech stock, and the first article that we're going to be looking at here is an article where they agreed to buy a drug candidate. It's a preclinical drug, so it's not that major. For if we scroll down here, we should find it for 30 million upfront payment of 30 million in exchange for rights to the drug and to develop it, and the company that they're buying from will still receive royalty payments for specific milestones and everything. So this is basically just a typical drug buying from a company. This is pretty positive for EXEL though, because the company itself is a cash cow. We can look at statistics here. Here, yeah, when we see it has 1.5 billion in cash, which is pretty big for the company, considering the company only has a $5 billion market cap. So it does definitely want to be making those purchases and expanding the pipeline, which they did do in this purchase. Of course, it's not that big of a purchase because it's only preclinical drug, but still, they are still making a good purchase, which is a sign of good business. Now, the next article we'll be looking at is by Zacks. It talks about the earnings. Right here it says Q3 earnings top estimates, and the Pacific was around a 20% beat in the earnings estimate, and decent beat in the revenue estimate, so that's pretty good for the company. They beat earnings estimates. The actual report, though, was a bit later. That was just an article talking about the report. They actually reported it a bit later on November 1st. On November 1st, they also released other articles. One article was how they bought, I believe, a preclinical or phase 1 trial drug for 40 million in an upfront payment, and then additional 70 million in short-term milestones, so phase 1, phase 2 milestones, and then there is still more milestone payments for sales. If they get 100 million in sales, they're gonna have to pay some portion to the company that found the drug. But still, this is good news because, again, they're a big cash company, and they need to start spending that cash and increasing the pipeline. And then, our next article is, again, them buying another preclinical drug here. This one was for 60 million. And this drug, it is not really preclinical because it's pending a phase 1. So it's gone through clinical development and it's now going into phase 1. But still, it could definitely fail. So there is some worry about it. It's not a certain as to a phase 2 drug. But they're buying it for a 60 million upfront fee and then a 642 million in milestone payments. But again, with milestone payments, those aren't bad because if it gets to a point where you have to pay out a milestone payment, you're already making a lot of money. So we really should not worry about that $642 million and only focus on the $60 million, which is quite cheap for the drug. So just to recap what we're seeing here is they just reported a good quarter, so that should be some positive momentum. And now they've bought 3 preclinical or entering phase 1 drugs, so they're really boosting their pipeline, which is really good considering that they are a cash cow stock, and they really need to boost the pipeline. So they are doing that, which should get some positive near-term share, near-term price growth. Here's another good article. It's by Zacks, and it talks about how EXEL is a good value stock. Here it gives the value rank of A. Zacks value is very important because value stocks have an ability to go up a lot more in the market and have a lot more support. So, like, let's say we're buying a stock for short-term purposes. If it doesn't work in the short term, it's already at such a good value and such a good company that'll work on the long term, and this is definitely that type of company. So we're sitting here that Zacks thinks that they're undervalued, which is good. Another article here is how the company announced a promising additional dose injection result from a phase 1 trial. So this is a pretty good article because it basically has this phase 1 trial going good, which means that they might have to do another phase 1 trial, but at least there was some promising data from this phase 1 trial. So it's not like the drug is going to be part of the 90% or something that doesn't pass phase 1. I mean, there's still some risk because I don't think phase 1 is done for the drug, but this is some pretty good promising data. So that's definitely also going to help the stock's price. That's all. I couldn't get this stuff up on my phone, so that's why it's a different recording setting. But back to the main points. We see here Yahoo Finance thinks that the company is at a 62% undervaluation. So that's pretty good to prove again that they're valued. Good. And here if we look at Simply Wall Street, this is a good company. That site, they have the value at a 4 out of 6, and they have 2 good value rewards with trading below the calculated fair P ratio, and then trading at 61% below undervalued, which is similar to Yahoo Finance's undervalued ranking. And then again, Zacks had them ranked at B, so that's good. The site just isn't loading. There you go. There you go. You can see the ranked at a B. Now for some other statistics about its health, because that's also good. You don't want to invest in a company with terrible health. Again, here to highlight how it's definitely a cash cow. We have that 5.31 billion market cap. That's its current market cap. Then we have the enterprise value of around 4 billion. So that's 1.3 billion in cash. You can just see with the difference in its enterprise value. We're actually looking at cash right here. The total cash is 1.5 billion. The total debt only like 160 million. So definitely they have a lot of cash that they need to be spending to be a good company, which they are spending. And as we saw, those 3 clinical drugs that should really help the stock's price. Again, just to look at how healthy the company is, the current ratio is at 6.41. 6.10, sorry. That's a really good current ratio here. To look at some other sites just besides the earnings that show how healthy they are. This is Simply Wall Street, really good site. The Simply Wall Street ranks the future ability, like earnings growth and stuff, at a 4 out of 6. That is really good. And health is 6 out of 6, again, pretty good. And then here they even say earnings are forecasted to grow 31%. That is kind of predicted because they're all a biotech company, but still definitely undervalued. Definitely a good, healthy company. And then here at Zacks, we're seeing, again, a growth score of B. That's pretty good. Which means that Zacks thinks that they're going to have a good growth in earnings. So what we're seeing right here is a great, healthy company that even before these articles were really healthy, and now because of all these new articles, this the earnings article and then the 3 buying new trials articles should really help the stock in a short-term price and also long-term price with a buying the new trials, because once they get a phase 3 and get approved, that will definitely help the stock. And then finally that phase 1 trial where it got good results, all these articles are the sudden new splash of great momentum that should happen in the stock price. And if it doesn't happen, we still have a really good, healthy, good valued, good growth company here. So if our short-term aspirations for the stock doesn't happen, we have great, even better long-term aspirations for the stock here. So yeah,